My name is Adam from Trade with Precision, and welcome to this episode of CMC Markets Technical Insights. There are a lot of potential opportunities in the markets having started to evolve just over the last couple of days. So, of course, there's quite a bit on my watch list. And I haven't even included currencies. So please excuse me if you are a fan of currencies. There are just so many other opportunities at the moment. I'm going to be focusing on markets that trend quite a bit historically. I am certain there are also opportunities in currencies. I just have limited time in today's particular episode. But I want to take you through this. The very first thing to draw your attention to, these are markets that I'm going to be having a look at. Global indices as well. We've got a level of support potentially about to be tested for, bigger upon a level of resistance potentially about to be tested for support. On the Dow, I quite like the look of that. So pullbacks into this level. Monthly, of course, looking very nice and bullish throughout the month of January and likely to break the high of that very, very bullish above historical support. So looking for entries as price pulls back to this level. Also, if that overlaps with a Fibonacci level or potentially as well as say a pivot level on the lower time frames. So this is going to be a swing entry to the upside. I like the look of that. This is a similar approach with the S&P as well, just noting that there is heading down towards support and resistance. I'm just going to take note of where price can pull back into those moving averages, and I'll be looking for a small bullish candle as a swing entry to go long on the break of the high of that candle, and so some potential opportunities expected there. The momentum indicators are looking healthy. This also follows through with the US Nasdaq. This one actually having a very clear level again of support and resistance. Now, price doesn't necessarily have to come back to that. It might find its way pulling back down to the next level of support and resistance, but based off the general stable behavior of it, this makes the most sense to me. And then, of course, out of the US indices, the last one on my list today is the Russell 2000, the small cap 2000. This one already heading on its way, and I will mark in that level at some future point, looking for price to come back to that. The next thing that I am going to do is to monitor these on the 4-hour time frame. So really my expectation here is to see similar types of behaviors where price will pull back into a level of resistance or support or bullish candles within the moving averages. So I will do the same throughout all of these on the 4-hour time frame as well. Ideally for me, it'll pull back on the daily, but if it is incredibly bullish, it might actually just ultimately continue on the 4-hourly, and it may not pull back for a week or two, but it has already gone through. It's a really good time for it to potentially come back and test it now, and so sooner rather than later, but at the same time looking for those bullish candles in the moving averages on the 4-hourly time frame as well. Now, in terms of what I take positions on all of them, absolutely the key thing here really is that I would certainly be careful not to increase my risk on all those trades. I potentially be looking to split up my risk amongst those trades as well, so trading a smaller amount of risk per position so that I'm not exposed across the board. A lot of these indices are looking bullish. This is now the UK 100. So this is very much about the probabilities are that the market is looking bullish, technically speaking, having broken through levels of resistance and continuing upwards. Very nice, strong, healthy trends on the 4-hourly time frame. The momentum indicators are looking bullish. There's no bearish divergence there. The momentum looks really nice. The price action looks stable as well. So my issue is really going to be risk management. All right, it's not impossible with the volatility we experienced during 2018. It could recur. We could find the market starts a trend and then just turns back on itself. So there's no guarantees in life. So what I have to do is go in line with the probabilities, which is what technical trading is about. Probabilities are here that the market is generally bullish. And all I'm really going to do is make sure that I make sure my risk is appropriate to the potential risk in terms of the market behavior. And so splitting up my trade sizing, my account sizing, and how I allocate it to the trades. Also by having a look at splitting it amongst all the positions that I'm keen on taking. So Japan, this is the Nikkei. I'm just highlighting this because this is forming a slightly different pattern, almost more similar to a breakout pattern, and actually just highlighting here that these momentum indicators are looking bullish. So if you are familiar with a momentum breakout strategy, that is one of the ones I'm looking to employ here, but it's ticking all the boxes. Momentum indicators are clearly trending upwards, which is a big factor. That's a green light on my checklist of items here. I like the look of that. So that's the Japan 225, the Hong Kong 50, also having pullback into those into the previous high right here, testing that. Also there producing bullish candles here. So again, I've already got setups potentially within the Hang Seng on the 4-hour time frame. All of these really looking to continue to the upside. And the last global index on my watch list for today is, of course, the Germany 30. Just highlighting that simply because it's also consolidated, got a level of resistance just up ahead, but a bit of a round number as well as potentially testing a level of support and resistance. So this one, the least favorite, further down down the list, but certainly worth keeping an eye on because of bullish candles that could form in the buy zone, just noting that level of resistance there. These are all ones that I'm going to be looking for entry positions on. All of them, I'll just be managing my trades and my risk appropriately. That's very important that I do that. Then on to other items that look commodities. I like the look of the coffee Arabica. This is a bit of an horizontal level breakout, similar to a momentum breakout approach. Also liking the look of those momentum indicators. Nice bullish price action. If I'm concerned about a false breakout, I can always wait for it to move and then wait for it to retest potentially, and then just take a trend flow setup from the other side. But of course, the point of that momentum breakout is to get in on the breakouts of that. So I'll be monitoring it for that, essentially liking the look of that. And of course, I do like that potentially on that 4-hour time frame. So that's not bad. I like the look of coffee Arabica for a bullish breakout. One thing I am very much aware of is that there is a key resistance level. As I head up a little bit higher, there's a historical resistance level just above that, and I will be very careful about making sure that I do take some profit ahead of that key level. That'll be an indication of how much potential profit there is on that trade. Then having a look at gold. Gold, of course, is doing a retracement back down towards the 1300 number. For me, in an ideal world, a retracement back down to a round historical number such as 1300 is ideal. It's also back within the moving averages, and even better would be to see it test the previous level of resistance and bounce off that, also finding that it would potentially overlap with a Fibonacci level. These would all be reasons for me to get in. I'm a little bit concerned that some of the momentum indicators look as though there's some divergence there, and that is a bit of a concern of mine, and being a little bit overdue for a weekly retracement. But 1300 and the overall strength of the trend is very much going to have me consider taking a trade here first to the upside. And then it's a similar approach with silver. Silver's already pulled back into that level of resistance, and I may be looking to see that tested for support. So I like the look of that again, testing that level of support. That's not bad. Also on my list, of course, is palladium. Now just highlighting why I quite like the look of this. Price pulling back into the moving averages, certainly trying to break out from the lower time frames, looking nice little consolidation there on the weekly, also close to a nice round number 1300, and it's very keen to continue on. I think in this case though, I may well wait for it to start to move, but I'm also very aware of this level of resistance, okay, heading up here towards 1360, 1365, as well as 1400, that big strong reaction against that, but overall this looking bullish. It's the least favorite of the lot, but definitely still showing some opportunity. Now lumber looking well overextended and entering into around number 420 there of resistance. Nice uptrend on the weekly time frame. Definitely overdue for a retracement to come back down and test that previous level of resistance for support. So a nice entry on the weekly for this as it resumes this trend to the upside would be ideal for me. So that gives you a sense of how far I would be looking for this to pull back and retrace into this area. I'd be looking for that. That's as well as potentially that being a Fibonacci retracement area. So this is on my watch list in the coming week, this week and next week, for a potential entry there. Lumber, which doesn't always get a look at, and so I'm going to put it there. That's definitely on my watch list. Soybean oil, I'm actually drawing, this is what I'm looking for today. There's, or certainly over the next, let's call it 24 to 48 hours, is it's pullback close to a round number as well, and back in the moving averages. Nice little bullish candle here. If it breaks above the high of that, I'll be looking for an entry long. It's also pulled back to the highs here on the weekly time frame, so that looks quite nice. Orange juice as well here, producing a bit of a bearish candle. Nice strong downtrend on multiple time frames, a little bit overextended from the moving averages, but not enough to put me off potentially looking at this as a bearish candle, then a break below the low of that as a continuation to the downside. I want to keep an eye on any historical levels of support and resistance which we're at. So if we break through this, we should have a bit of a rundown on next level. And these are a couple that I like the look of that are currently setting up, but really a lot of my attention is going to be put on those global indices, where I will be monitoring over the next couple of days, and then a couple of the earlier commodities that I quite like the look of there, and how I'll be going about it. It is very much going to be about, the trends are very much in place, but it's very much then going to be about how I manage my risk and how I manage my trades. A lot of those I'll be looking to take some profit, part profit, as soon as I start to head towards my one-to-one reward to risk, and looking to get my trades to break even as quickly as possible. On that note, I want to wish you a wonderful week, and I will see you in future CMC Markets Technical Insights.